The dollar versus Canada moved sharply to the downside after the stronger than expected Canadian jobs data. That sent the dollar Canada lower, the Canadian dollar higher. But we did stall out on the downside and have seen a rebound back to the upside. I'll talk about the technicals that are driving this currency pair in this video, so let's get started. I'm going to look at the 5-minute chart to start off with. Why? Because prior to the release, the price actually moved down rather sharply before the number was released, and then the number came out, and we saw increased momentum to the downside, which took the price all the way down to 1.4054. Was there a leak? I don't know, but this move quickly to the downside was somewhat head scratching, I guess, but nevertheless, since we reached the bottom, we did see a double bottom right here, and that gave the buyers or the shorts some concern, and they snapped the price back up. But we moved back toward the 50% of this trend leg to the downside and found willing sellers against that level. You'd like to see a 38.2 to 50% retracement to hold resistance on any sort of a snapback rally, and indeed it did, and the price has since rotated back to the downside, and we are trading back below that level. So what next for this pair? Well, to take a look at that, I want to look at the hourly chart, and when we look at the hourly chart and the price action of this move to the downside, what we see is that the price fell below the 100-hour moving average. That's more bearish. We also fell below this key target, which we were looking for in trading off of this high yesterday. This key target was at here at 1.4079. That was the old high before breaking to the upside right here. So getting below that level was more bearish, and that led to the further selling, which also took the price back below this swing area through here. This swing area was the new ceiling after breaking higher, making the high. We formed this ceiling here before moving to the downside. We returned back to that area and trading this week, trading above and below it, but below this old high right through here until we broke above it and trading on, Tuesday, pushing to the upside to our highs where we had this double top up here before moving back to the downside. So getting below this area and getting below this area was targets that we needed to see happen. The next targets after that became the 38.2 and the 200-hour moving average, and they remain key targets. So what now, however, the price did rebound, and we did move back above this level right here at the 1.4079. That was a little bit of a concern, but like we saw on the 5-minute chart, we did stay below the 50% of the trend leg to the downside. So you can maybe justify it, but going forward, I don't want to see the price move back above the 1.4079 level if the sellers are to remain in control. So watch that level as resistance. Now that's a risk-defining level for traders looking for more downside. On the downside, what you want to see is the price move back below this swing area right through here, back below the 1.4060 level. That, I think, should open the door for a move toward the 38.2, 200-hour moving average, and we'll see what happens at this level. Do the sellers have the courage to take the price further to the downside? Do the buyers come in against that level? That's going to be a key level for traders, not only today but going forward. So there you have it, a look at the dollar versus Canada. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.